As the talk of blockchain, NFTs, and crypto progresses, we are sure you have come across the word smart contracts, and you may be wondering what they are. Well, it was an idea that was proposed in the 1990s by a man named Nick Szabo, a pioneer of modern computer science. He defined them as a set of virtual promises with associated protocols to enforce them, such as the Bitcoin protocol, which basically records the proof of a payment and can be seen as a primitive version of a smart contract. To elaborate, smart contracts are simply programs stored on a blockchain that run when predetermined conditions are met. They typically are used to automate the execution of an agreement so that all participants can be immediately certain of the outcome, without any intermediary's involvement or time loss. They can also automate a workflow, triggering the next action when conditions are met. The smart contract itself is written in virtual language and has the power to execute and enforce itself autonomously and automatically, based on a series of program parameters. With blockchain technology, its main value lies in reinforcing security, transparency, and trust between signatories, avoiding misunderstandings, falsifications, or alterations, and dispensing with intermediaries. Smart contracts permit trusted transactions and agreements to be carried out amongst disparate, anonymous parties without the need for a central authority, legal system, or external enforcement mechanism. Smart contracts can define rules like a regular contract and automatically enforce them via the code. Smart contracts cannot be deleted by default, and interactions with them are irreversible. A smart contract, like any contract, establishes the terms of an agreement. User accounts can interact with a smart contract by submitting transactions that execute a function defined on the smart contract. Since the emergence of the digital currency, Ethereum, the creation and execution of smart contracts has been simplified, as complex transactions can be programmed into Ethereum protocol. Smart contracts allow developers to build apps that take advantage of blockchain security, reliability, accessibility, but while still offering sophisticated peer-to-peer functionality. Everything from loans and insurance to logistics and gaming. So you may be wondering, how do smart contracts work? Smart contracts work by following simple if, when, then statements that are written into code on a blockchain. A network of computers executes the action when predetermined conditions have been met and verified, such as when a smart contract receives funds from a user, its code is executed by all nodes in the network in order to reach a consensus about the outcome and resulting flow of value. These actions could include releasing funds to the appropriate parties, registering a vehicle, sending notifications, or issuing a ticket. The blockchain is then updated when the transaction is completed. This means the transaction cannot be changed and only parties who have been granted permission can see the results. This is what allows smart contracts to securely run without a central authority, even when users are making complex financial transactions with unknown entities. To establish the terms, participants must determine how transactions and their data are represented on the blockchain, agree on the if, when, then rules that govern those transactions, explore all possible exceptions, and define a framework for resolving disputes. Then, the smart contract can be programmed by a developer, but a smart contract can be created and deployed to a blockchain by anyone. Their code is transparent and publicly verifiable, which means that any interested party can see exactly what logic a smart contract follows when it receives digital assets. Smart contracts are written in a variety of programming languages, such as Solidity, WebAssembly, and Michelson. The advantages to a smart contract are that they are speed, efficient, and accurate. Once a condition is met, the contract is executed immediately. Because of smart contracts are digital and automated, there's no paperwork to process and no time spent reconciling errors that often result from manually filling in documents. They're trusted and transparent because there's no third party involved, and because encrypted records of transactions are shared across participants, there's no need to question whether information has been altered for personal benefit. They're very secure. Blockchain transactions records are encrypted, which makes them very hard to hack. Moreover, because each record is connected to the previous and subsequent records on a distributed ledger, hackers would have to alter the entire chain to change a single record. They allow for savings. Smart contracts remove the need for intermediaries to handle transactions and, by extension, the associated time delays and fees. And lastly, sustainability. Contracts eliminate the use of paper in offices, notaries, and registrars, and pollution is reduced as a result of less travel. Some smart contract platforms include Ethereum, which is currently the most popular smart contract platform, where smart contracts are written in a programming language called Solidity and executed by the Ethereum virtual machine. but many other cryptocurrency blockchains can be used. Some of the most widely used platforms to develop and execute smart contracts on blockchain are Hyperledge, an open source system developed by a Linux Foundation that is not a cryptocurrency, but a flexible platform on which smart contracts can be developed. Next, Counterparty. This platform incorporates data into Bitcoin transactions. Third, Polkadot. It is an alternative to blockchain and is famous for its ability to host parachains, chains within chains, allowing more transactions than usual. Then, Uniswap, a decentralized exchange that allows users via smart contract to trade certain types of crypto without any central authority setting the exchange rates. And lastly, Compound, a platform that uses smart contracts to let investors earn interest and borrowers to instantly get a loan without the need for a bank in the middle. Smart contracts have applications in all areas where traditional contracts are currently signed, such as records. Smart contracts will facilitate the storage and maintenance of records. In trade, most commercial activities depend on the approval of their funding, which is a time-consuming and resource-intensive process. Thanks to smart contracts, this time can be drastically reduced. In supply chains, Internet of Things devices can be used throughout the supply chain to record every step of a product and improve its traceability. In this way, errors, theft, and loss can be eliminated. In mortgages transactions based on smart contracts will be cheaper, faster, and safer. This will allow buyers to access the property earlier and update the records automatically. The actual property market, smart contracts can be used to register property ownership more efficiently. Next, in human resources, the use of smart contracts that record a person's academic qualification, certificates, and experience can prevent fraud in CVs, and therefore facilitate the recruitment of individuals, also companies, providing a service. Health, it's an application in the sector can range from the traceability of medicines to the management of the cold chain, the health passport, or clinical research. A big one, elections. Electoral fraud is a real risk in some countries and has been used as a political weapon to destabilize others. Smart contracts make it possible to validate a voter's identity and reliably record their vote. And lastly, insurance. The industry spends millions each year on claims processing and claims handling. Smart contracts will allow payment amounts to be determined automatically based on the type of policy. And these applications are just touching the surface. Smart contracts allow developers to build a wide variety of decentralized apps and tokens. They're used in everything from new financial tools to logistics and game experiences, and they're stored on a blockchain like any other crypto transaction. Smart contract powered apps are often referred to as decentralized applications or DApps, and they include decentralized finance or DeFi tech that allows cryptocurrency holders to engage in complex financial transactions and aims to transform the finance industry. What are your thoughts about smart contracts? Let us know in the comments below. If you enjoyed the video, please be sure to hit that like and subscribe button so not to miss out on more.